Welcome to this tutorial on market trends, and I'm going to demonstrate to you how I analyze which side of the market I want to be on to decide whether I want to be long, short, or if we're just in a neutral situation. So there are 5 tools that I use to help me determine that. These are big picture tools that I begin with, and these will help me again to determine whether I want to be bullish or bearish, or whether in a neutral situation. They make a huge difference in your trading. So here's tool number 1. And by the way, I do look at these in this order during the trading day. So here we've got a quote screen, and you'll see that I've got equity cash, equity futures, and I got various sectors down there. And so there's 2 things that we look for here. Number 1, we look simply for green and red. So obviously, if it's green, those markets are up for the day. If they're red, they're down for the day. So if we get all red, then obviously we're in a very bearish market that day. If they're all green, very bullish. And if there's kind of split, then we've got what's called a Christmas tree in trading, where it's a bifurcated market. You also want to look at your sectors as we've got them down there. If all the sectors are red, oh my gosh, that is a very, very bearish day. Now, the other thing that you want to look at here are the percentages. So the net change, the net percent change. So look at the equity cash, for example, there. We've got the Dow, the S&P, the Russell 2000, the NASDAQ 100. So you see the Dow is up a little bit. Well, the percentage, 0.14%, is negligible. Basically, I consider that 0. So the Dow today, pretty neutral at this point. The NASDAQ 100, very, very bearish. Anything that gets close to 1%, I would consider very bearish. So even the Russell, pretty bearish. So you can't just look at red and green. That's the first thing we just eyeball real quick. Takes half a second. And then you have to actually look at the percentages. And if you're trying to determine, okay, well, we've got a bearish day, which generally this is balancing a little bit more toward the bearish side. All right, well, which markets do I want to trade today? All right, I might want to trade the Qs, I might want to trade NASDAQ stocks, or whatever. If I'm going to be bearish, I'm not going to trade the Dow stocks right now, right? Because they are not as bearish as the other markets. So that's the first tool that I'll look at to give me a big picture of what I expect in the market. Now here's the second one. So the second one, this is up-down volume. Again, I'm going to show all examples here with the NASDAQ 100, but you can do these with the Dow, the S&P, whatever. So what this is how much bullish versus bearish volume there is in that index. So every day starts out at 0. You'll see the big 0 line there, the horizontal white line. So every day starts at 0, and then it goes up or down, or sometimes it'll just go sideways. So if the line just hovers around the 0 line, then that means that, well, there's really no imbalance of power as measured by volume in that index. And that's good to know. You might be in a choppy market that day. And if you've wondered how to find out if you're in a choppy market or not, this is another way. But in fact, all of these are. So not only do these help you determine whether you're in a bullish or bearish market, but if you're in a choppy market. So anyway, right here, we've got definitely a dominant bearish energy of overall volume. Again, these are just big picture stats, and these are not indicators. By the way, these are actual indexes. You type them in like you would a stock index. If you're curious about what the symbols are, and that's what you'll need, are the symbols, like stop typing in a stock symbol. Contact your data broker. They will vary from one data platform to another, one charting platform to another, one broker to another. So here you see the TradeStation ones. All right, the third thing I look at is the advanced decline issues. So, and then I put a little moving average with it as well. But because, as you can see, the cyan line there gets kind of choppy. So I'm looking for the overall direction here on this particular day. In the morning, the first hour, we've definitely got a bullish predominant energy. And so the number of issues going up versus down is imbalanced to the upside. So I would only want to go long. Now let's say that I'm looking at my technical analysis and I get a great short on my charts. Would I want to take it? Probably not, right? Probably not, because I don't want to fight the dominant energy of the market. That's probably going to be a great setup that fails because the dominant energy of the market's to the upside. And it's pretty hard to fight that. pretty hard to fight that. Now, it turns around there about an hour later, around 7:40, 8 o'clock, so forth, and then I'd want to be bearish and only taking shorts. So got to always, with trading, got to always keep your head on a swivel, right? And you got to know that things can change at any time. But this will give me a big picture as to, okay, maybe I'll only take longs, at the first half of the day, and then only shorts a little later on. And then the last one that I look at here, the fourth one I look at, this is the tick index, and again, using the one for NASDAQ 100 right now, just for our example. And here the big deal is above or below the zero line. So in this particular situation, if it's above zero, then we are generally in a bullish mode. Now, this is a faster index, so we're actually going from slow to fast. And that's why I do them in this order. So this one happens a lot faster and gives you more precise readings at a snapshot in time. So I've got a 1 minute here. So now don't expect it to always hold the zero line to the pixel. That's just unreasonable. But you can see I've got my green lines above, my red lines below. And so if we're in a bullish day, we're just looking forward to basically stay at zero or above. And in this case, not really interested in shorts. So when we have this scenario going on, I'm like, okay, only interested in longs. Even if I get valid short setups, those are probably going to be ones that fail. So I'm only going to take my long setups today, or at least during this period of time. Now, again, that can switch around at any time. And then finally, the last thing that I look at is the actual market that I'm trading. So those others are more breadth indicators, right? Looking at the entire index. So then I'm going to drill down to the market that I'm trading, in this case, the NASDAQ, and I'll say, okay, let's look at a longer term time frame. And in this case, we've got a 10 minute. So the time frame can vary depending on what your short-term time frame is. But let's say you're trading a short-term tick chart or a 1 or 2 minute chart. Look at the long-term chart and just see, okay, what is the trend, the market trend of now your particular stock or futures contract or forex or whatever you're trading. And here we can see over 3 days, really, the dominant direction is down. So could some money be made going long? Yeah, there could be. We could see some retraces there. But really, why make it hard? Why don't we just go with the flow, right? Stop fighting the flow. Don't be a trading salmon and try to swim upstream. Plus, the other thing is, not only will your win-loss ratio be better if you're just shorting on days like this, but your risk-reward ratio will be better because the down moves are going to be more dramatic than the up moves. So there are 5 tools for you to use to evaluate the market trend at any given time and any given day. When all those align, then, well, at least for me in my house, that's the direction that we trade, and that's the only direction that I'll trade regardless of setups that I receive. So if you like this video, please give it a thumbs up and write any comments down below. We really appreciate your comments. If you have any requests for future videos, feel free to enter them there as well. And share good things with good people. So click on that beautiful little share button below and it'll be much appreciated. And finally, I do have a free course for you. It's a 5-video little mini course. Fantastic course, actually. It's not just theories, but I'm going to give you one of my favorite trade setups in it that you can actually take and test. And if you like it, start making some money with it. It's called the Rubberband Trade. And you can get that absolutely free by clicking in the little box there at the top right-hand corner. And that'll give you access to the Rubberband Trade.